Hey there, everybody, and welcome to Real Estate Divas. Today, we are going to be talking about raising capital. So if you're interested in raising capital or, just how that works as far as getting involved in syndications, getting involved in investing some money into some properties, that sort of thing, we have a fabulous guest today, Kaylee McMahon. McMahon? I say your name wrong all the time. I'm so sorry, Kaylee. McMahon. And my earbuds keep coming out. But I'm Jaylee Thompson with Texel Real Estate.
I'm Kristen Gerst with Capricorn Mortgage Investments. And I'm super excited to have Kaylee on. Kaylee has become a complete badass in in the multifamily syndication world over the last year and a half. And she's got a ton of experience now raising capital. And yes, the Real Estate Divas, we are more geared towards real estate, but raising capital can apply to any form of real estate. Any form of entrepreneurship.
True that.
So if you're starting a business, number one important thing, where are you going to get the money from? And as I tell all investors, money is finite, and you need lots of it running a small business. In cash flow, managing your cash flow, making sure. So,
well, let's dive in. So, hey, why don't you go ahead and just tell us how you got started in this genre? You have your real estate license, and what made you pick this?
In raising capital or apartments or syndications?
Where do you want to start?
Let's go ahead and start with, I know you got because I used to see you around, and then all of a sudden you started showing up at every single event that I was at, and I was like, my God, this girl is hustling. I'm like, I thought I was at everything, but this girl is everywhere.
I'm gonna keep doing it, but we're doing it this way instead.
Yeah, exactly.
Exactly. So yeah, when I know you wanted to be a multifamily syndicator. I know that was what your goal was. So how did you get started? What was your goal when you got started? I know you became just great at raising capital, which is what syndication is all about.
So my goal, a lot of the terminology that we're talking about right now, I didn't really know getting started. You kind of learn it either through books. I took about a year to learn things before I ever put my first letter of intent in, because it's scary, if you don't know, and you still will continue learning every day. But for example, someone who's a syndicator, that just means that you syndicate your deals, that you can use the term principal, you can use the term deal sponsor, many other different things. But getting into multifamily in the syndication avenue kind of came from other people. And I had just thought to myself, doing house flips and real estate brokerage, that's great and all, but what I really want is to be able to own more real estate and be able to own it enough where I could make decisions if someone needs a place to crash, if somebody, my ultimate goal would be to be able to create independence for other people, whether they're investing in the project or whether they're living on our properties. Because as an owner, you run into situations where people need help or the community needs help, and there's ways that you can actually get involved if you're a business owner. So that was really my ultimate goal. And then obviously not wanting to work for anybody anymore. So then how do you do it? Then that's kind of how I learned about syndication. It's just a method that you can use to raise capital.
All right. So starting out, definition of syndication for everybody out there going, what the hell is this woman talking about?
Yeah.
It's just syndication.
Yeah, so syndicates or syndications can be formed. It's a group. They're formed formally by your attorney or real estate or SEC attorney because usually you're offering a security. So you're, instead of selling a product for $1, you're selling a share of the company or the apartment deal, which is equity for money. So it's selling security. So you do have to file with your SEC securities attorney for these types of offerings. But a syndicate basically is pooling of money together to purchase a large institutional sized deal, which normally on your own you couldn't just say, oh, here's $5 million that we need for the renovation and the deal. Or sometimes the raise, we've done raises between whatever, like 500K I think was the smallest I ever did, and then up to like 8.6 million. And obviously it's not by myself, no way. But you're pooling resources and people together to be a syndicate.
So, right. So a syndication is just a pool of investors who are going in to purchase a property.
Larger properties.
Yeah. The way that we do it is definitely SEC regulated though, because like I know like technically it's like a syndicate because you're all grouping together, but people will call it JVs or they'll call it, different things. And the technical ruling is that if you have anybody that's involved in the deal that isn't like actually getting involved with making decisions of who's hiring, what supplies you're buying, et cetera, over two people that aren't making decisions, that's a syndicate and they're selling a security. So a JV at that point, like if you've got four people, it's actually selling securities and it's a syndication is what needs to be filed. So do that. Do the right way.
Nice. Well, and so wait, we sound the sound's off.
Don't read it.
Oh, I'm sorry.
Very good.
So once you have a syndication, and then where do you go from there? Like y'all have come together, y'all have decided that you're pooling your resources. Do you then also solicit for other investors to just put their money in?
So there's several different answers to that depending on what type of offering you do, depending on a lot of things, but basically it's kind of backwards. So for example, you need to have pre-existing substantive relationships with individuals if you're doing a securities offering. So your friends, your family, your coworkers, your past investors, people that you have on like your database, those are people that you can reach out to once you have a deal that's been vetted. So we don't actually form the syndicate legally or the syndication until we have found a deal that works with our criteria. We have then basically put all of the risk capital up front, all the due diligence money up front, earnest deposit, all that stuff, and then engaged our attorneys, and then gone into the contract negotiation, and then gone into due diligence, which sometimes will last 30 to 45 days, usually. Then once that period of time is up, then we can check our assumptions and go, okay, it's exactly what we thought it was going to be. So the returns and what we can put into the prospectus for people to read, it checks the box. So now we can go out and start the syndicate, name a company that is, like, for example, what we do is we do one company per apartment, a new entity, and then we'll syndicate within that entity. So the people that come in and come part of that entity, they're syndicating into that apartment building, I guess, if you will. So I keep myself and managers separate, and then we'll invest into that group. So
by the time you're actually ready to talk to your specific investors or your possible investors, your potential investors, you're already, if my math is right, probably 60, 90 days into this project.
Yeah, we pretty much usually have like 30 days to raise. It's always really stressful. Yeah, and then you may get lucky, or not lucky, but we always build in 2 15-day automatic extensions just as kind of like a chess game, I guess, if you will. Plus I'll get in like an extra 10 days, like if the lender requires, for free, and then some other tricks. But, because stuff happens where people are transferring money, or if it's coming from an IRA that wasn't self-directed yet, or other things like that, they're like holding up the show. But if we have an automatic 15-day, then another automatic 15-day, then we can finish off and close.
Nice. So whenever you're soliciting to, raise that money, you're looking for accredited investors. You want to explain exactly what that is?
And it's funny, a lot of people think of it that way. So there's several different ways currently that you can raise capital. There's a Reg A, Reg A+. What we do is Regulation D, as in Delta, and there's a 506B or Buddy side to that, and then a 506C, which I call it commercials, because you can do commercials. So if you do a 506C, then yeah, you can run commercials, ads, you can solicit, you can whatever. It's not a general solicitation, but it is for credited only, like you said.
Yeah.
But if you do a 506B Buddy, you can only give that privately to your friends and family, basically, or those investors that you've had a pre-existing substantive relationship with. So like in my database, when I meet someone, when you scan their card in or whatever, it has a date, like a timestamp. So I know like when I met that person, and there's certain people that like I have to cut off if I'm going to email them about a new project. It's like, well, I didn't know you yet, so.
Gotcha.
Yeah.
So is there a certain timeline that you have to know? The investor? Well, you said it's a cutoff. So I mean, obviously they're in your database when this new one comes up and you're starting to email. But is that, is there a certain timeline that you have to do?
for a Regulation D506B offering, the black and white answer to that, to be honest, is once that deal is under PSA, so purchase and sale agreement, or contract, which is prior to even reaching out to my pre-existing network, as soon as we sign on the dotted line, then it stops. Anyone before that's good. Anyone that I meet after that is not good. Okay. So that's the black and white answer.
Okay.
Gotcha.
Got it.
Well, so how do you go about, I mean, you're raising money. Are you doing the raising money and you're finding the property? I mean, that's a whole lot going on there.
There's even more than that. Yeah. It's definitely is a life suck, but it's supposed to be worth it. So, there's a lot that you put into something you want to do. Something that's hard is hopefully worth it, or that's what I hear. So really what we do typically is we'll have a team of 3 is ideal. So 3, like John Montero, he'll say 3-legged stool. I think that's so cool. So you'll have somebody that is usually finding the deal, typically the hunter, the person who found it, because not usually people don't find it at the same time. Usually someone's like, oh, I found this. So they'll have the deal finder, and usually they'll go after it. They're the one that underwrites it. They'll put in the offer. They'll get it accepted. They'll put up some of the risk capital, if not all, and then y'all would pitch in together as a team. And then they'll kind of do that job moving forward. And then you'll have someone come in that, and this is ideal, it's not always this way, but you'll have someone come in that's specifically just focused on raising capital. It's all they do every day, eat, breathe, sleep. It's all they do. And they help parlay. So for example, we all raise money, but as a team, but that person's job. So for example, if I have to go sit with my attorneys and go figure out the contract that day, I'm going to pass off my person that I need to spend time talking with to them and say, hey, call Joe, he's going to handle that. And then the third leg to that stool would be operations. So an asset manager or someone that's in charge of operating procedures and how the property is ran, monitoring due diligence, what crews to hire, what benchmarks they need to hit, and moving forward after closing, kind of continuing along those lines. The raising capital person will usually become the investor relations person. But then again, we can all help each other. But it's usually best, I find, to pick a lane before closing and then pick a lane after and stay in that lane. So.
Which is always good advice for anything you're doing in any company. I always say, pick your lane, stay in it, figure out where your strengths are, and then find somebody to work with that complements your strengths
and does maybe the thing that you're not quite as interested in.
Right.
Yeah.
Right. And in really building a team, and I know there's a lot of new investors that are always so concerned about doing that out there. They're like, oh, I've got to do it all, or who's going to partner with me? And
I think
work
a lot
with
of that comes from whether it's investors or, like we were saying before, entrepreneurs. Whenever they're getting involved in something, you're so overwhelmed with everything that's going on, it's hard to figure out how do I find somebody to fill that void? How do I find somebody to do this for me? What if I pick the wrong person? So I think that's kind of like the paralyzing factor that comes into play.
Well, and it goes back to it's working on your business, not in your business.
Exactly.
And so finding people to work with or finding professionals to hire is key if you want to get past, being a guy with a truck and going and laying your own tile, And a lot of us get started doing just that. But then you realize, my gosh, with all that time wasted, I could have been out building things. So.
Yeah, I could have been making more money using my time more wisely.
Right.
So whenever I definitely would echo exactly what you said. I've learned that lesson. I'm banging my head up against the wall, relearning that lesson, and I will never make that mistake ever again. Honestly, if you want to figure out who the best teammates are to be able to excel and push you forward, stay in their lane, have good solutions quickly, go with an experienced partner, period. That's the easiest way to do it. The hardest lesson I've learned is picking a newbie.
Yeah.
And you did that. You did that, correct? It was because I noticed that all of a sudden you were teamed up with some rock stars, and I was like, good for her. That says a lot about you, and I think a lot of people did see just your work ethic and how you were constantly out there.
Get it for myself, man. Get over your freaking ego and just it's the team. Lay it all out there. What do you guys need? What is my strength? What can I do? And focus on that to bring something of value to the team. And I've been told 100 times it's capital raising, which is funny because like I know my potential, but I'm not quite there yet. So what I've been doing is like over the lockdown, I took a course. I turned into a certified capital raiser by the Family Office Club. And I've read a few other books and met people that have kind of connected me. So I was going to add some of those things. You'll probably have some of those questions that will come up, but there's some really cool things. And capital raising starts way before you have a deal. Way before, but I'm happy to share some things that are just really starting to ramp up and work. They don't make money. It does take a lot of effort, but if you want to be able to like raise capital when you're ready to do it, you got to set the groundwork.
So how big of a part does social media play? I mean, because there's a lot of people who would argue, they're like, oh, well, I'm not actually paid to, be on Facebook.
Correct.
And people are surprised with me with my Facebook. I'm like, okay, well, it's a full-time job.
Yeah, there's a lot of work there.
Facebook's a full-time job. And are you doing it for business or are you doing it for pleasure? Well, mine's business.
Yeah. I need more balance. They always say that the best like ways to go with people's interactions and algorithms and all these things is to have some business and then have some personal. So I just put my weird on my Facebook and my weird on my Instagram, like yesterday, this is so dumb. I was in my kitchen and I made something on the stove burner and it's gas and it's like, anyway, so you know how gas looks? I dropped some food down in there and I was like, oh, this is funny. This is like operation. I need to go grab that food and I need to like not touch the hot, like stuff like that has nothing to do with work. I try to add some more of that in there, but it's because sometimes I can be too work,
Yeah.
Well, I don't actually put work on my Facebook. Not a lot of it. I mean,
Yeah.
Mine is more lifestyle.
Yeah.
This is what I'm doing. But make no mistake, it all feeds into that.
Yeah. Because you're building a relationship with people that you don't get to see every day.
Right. Yeah. And that's what's so cool about social media. I would say that if you're not taking advantage of it, you're missing out bigly.
Bigly.
Especially like on LinkedIn, man, like that's where the gold is. Like ching, 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 ching. My God, it's been awesome because there's these like widgets and things that you can use to automated text people and it follows the algorithms where you don't over message 100 people a day or like it grows as you like it's a bot basically, but instead of it going, I'm going to shut this off because you're messaging thousands of people a day, it kind of like titrates up.
Is that widget through LinkedIn or is it through
through a couple separate things? So I'm testing a new one, but one that does work is Dux Soup, DUX Soup. Mm-hmm. It's something that's free. It's a free Google widget, and it's got like a duck head on it. Actually, it's not free. It's like a couple bucks, like $3 or something. But
free enough.
You're able to just make one like main message, and it's always going to be talking about what does that person reading it get out of having anything to do with you. What kind of success could they have? We've seen this in the past, and then asking their level of interest. But it changes per group. So doctors see a different message. So passive investors see a different message, things like that. So that's been great. And over the lockdown, I've been doing it for a while, but over the lockdown, it went way up. So I was messaging about 100 people a day, automated. And I would get maybe like 10 responses back, and a couple of them were like, no, thank you. And I'm like, okay.
Slow down.
I asked your level of interest, not like, give me your money yet. So now actually everyone's way more receptive, which is awesome because I can be way more efficient. You know what I mean? I run that thing on a Monday while I'm doing other work while it's running in the background. And that's all I got to do. And then the responses come in. And usually the next thing has to do with like, oh, I wonder how I can get involved. And then I have a quiz that they take, which tells the investor if they're accredited or sophisticated. And then from there, we know kind of how to work with them or whatever. So now I get probably about 30 to 35 out of 100, so it's gotten a lot better.
That's a high response. Yeah. I mean, that's huge.
You just mentioned about credited or sophisticated. So what's the difference there?
So a really easy definition, there's like, if you go, like I have a piece of paper that goes through definition A through J, for each different one. But the top most important thing, I call it like the 1, 2, 3 rule. So that's for if you're accredited. So you're accredited if you have $1 million net worth currently minus your primary residence, or 2, if you make $200,000 per year, 2 years consecutive, and you're single. or 3 if you are a couple and you're making $300,000 joint or or more for 2 years consecutive. And then there's others, like you could be a S corp, C corp, a trust, a fund, all kinds of different entities and like what their requirements are. But it's like that's accredited. And then sophisticated is even more general, because it's basically like, do you have sufficient, knowledge in the industry that you're investing in to vet the merits and the risks of what you're going to invest in? Because you have to self-certify, at least on our Reg D 506B buddy offerings, they have to self-certify on the questionnaire. Now, when you do a Reg D 506C, the commercial one, they actually have to go to a third-party person that will work with their accountant or CPA and verify that they're accredited. So each offering kind of changes. But so far we've done Bs. I think I was involved. We did 1C, the Houston one, because it was so huge.
Well, for everybody out there trying to figure out, what happens if you take an investor that's neither? What's the penalty?
So I don't know. I don't work for the SEC, but I think it has to do with the fact that if they become dissatisfied, and typically what the risk is in real life, the risk is that someone wouldn't understand the risks and the benefits of real estate. So if the market changes or something that's out of your control changes, somebody dies and like something goes wrong and they lose all their money, typically when they're not to that level of, especially accredited, they are now dipping into more than 10% of their net worth, and that can ruin someone's life. So we won't take anyone either way that they're spending more than 10% of their net worth. I don't want to, make a huge difference in someone's life in a bad way if something goes wrong. And then they also wouldn't understand the risks. They wouldn't understand that, stuff happens. This does happen sometimes. So then most likely they'd be angry if maybe even their returns were less. Maybe they got returns, but they were less than projected or something like that. And so then they would go to the SEC and they would probably make a complaint, because it's a securitized offering, make a complaint, and then the SEC would investigate the individual or the company. And then depending on what the person said, I don't really know. I've never had that happen before. So, they can do an audit kind of out of the blue.
But you don't know what the punishment is, but obviously we don't want to do that. I mean, you don't want the SEC coming out.
There's going to be repercussions.
Right.
So the punishment from the SEC, there's 2 different types, but mainly the one that we always fear is that basically you can't say, it's like people use the word black mark. It's not really a black mark, but basically that they deem you ineligible to be able to move forward doing any other investments in the real estate industry, period. So you wouldn't be able to syndicate, you wouldn't be able, you're done.
You're done. Wow.
That's pretty harsh.
So, right. So one big thing with raising capital, there's 2 main types. There's raising debt, and then there's raising equity. How much of a percentage on, you said your smallest was $500,000. That was your smallest project that you've done to date. Did you have any debt that you raised, or was it 100% equity?
That was definitely, we used a bank. Oh, yeah. We always use a bank. So on that deal, it was 80% LTV. 80%
LTV. Okay. Mm-hmm. But you still had to find 20% in cash for your deal.
30%, yeah.
How much?
30% plus CapEx, with a portion of CapEx, capital expenditures. So we had each deal, I think it was probably, let's see, I can't remember off the top of my head. It was 278 and so basically for capital expenditures and so we use Fannie Freddie agency debt. They, one includes renovations, one doesn't. When we were doing this bank loan, they include acquisition and development in it. So it was more like a Fannie Mae. So they take the total costs and finance 80% of it. And so, the 20% included a portion of the capital expenditures and a portion of the cash that we needed to do the deal.
And just to be clear, when you're raising capital debt, that is any type of institutional funding, like bank financing. And in real estate, it's easy. I mean, you've got hard money lenders, you've got private lenders, and there's collateral, because when you're talking about real estate, you have something to collateralize all that money that you're borrowing. So raising debt is a little harder. The difficult thing is to get to a level where you're raising equity partners, and finding people to put cash into the deal.
On the debt side, we just use a debt broker if we're going to go that route. Usually it's just Fannie Freddie. So it's the reason we like those is, well, now it's changing because like it's a government-backed loan. So now they've had control over certain things with the CARES Act, and who knows what's going to happen with the HEROES Act. We'll figure that out pretty soon here. But typically, like, so my bank debt's actually been great because we've been able to evict people. We've been able to continue to do things. So things are changing, but usually we like those because they're non-recourse. So any kind of loan where the principals and the partners are not liable if the project goes south, the bank takes it back. So they don't personally come back after all of your assets.
You don't have to give a personal guarantee, but correct. Yeah.
There is a guarantor, but there's no recourse. So that's why I've got friends that they'll do it all day. As long as their net worth is there, they'll do it. Yeah. So far, Fannie, Freddie, bank debt. And then now on this coming deal, I'm actually working on a few interesting scenarios. And what's cool about commercial real estate is that every deal is unique. Every deal, you need to be creative, like learning a lot of things about even having options for the seller to save them taxes, having options for the seller where I would maybe even pay their broker fee, having options where I'm going to have them seller back carry a portion of it plus part of the money that we need for the capital expenditure budget by doing a pref equity. So instead of having him have a lien on the property, he'll get his 8%, 10%, whatever we agree on, but he doesn't have a lien on the property. So, I mean, there's all kinds of creative ways to structure these things. I'm still learning. I mean, there's a zillion ways to get deals done. I mean, even that happens in residential as well. I mean,
but I can see how, I mean, the more money you have on the table, then the more creative you get outside of the box so that it fits each individual person. That's, that would make it more exciting just personally for me. Yeah.
Well, and right now, just with the state or the future state of where commercial real estate is, I can imagine it's pretty exciting. You've got to have some people who are willing to do different things like seller carryback and, things that they wouldn't have been willing to do 6 months or a year ago.
Right. And it's even crazier now because like bridge financing, for example, there's this apartment I'm looking at. The guy has too much loss to lease. And so we could sit here and wait until he fixes it in 3 months. But I'm like, look, like we need to get on and move on. And like, I need to take over as far as the way that you're renovating stuff. We need to change the way they do countertops. They've got the front office manager sourcing all the materials and from his buddies. And it's just all over the place. The reason they have bad debts also because his buddies are living there. I mean, just we need to operationally change things to make it a good project. And we can. But so this is one where I'm like, well, we can't get bridge debt because they've kind of shut down right now. And even if we can, they're basically a hard money lender's rate, which kills our returns. So that's not going to work. Or, if I can go agency, we can't go agency yet or Fannie Freddie because the loss to lease is too high. And they won't accept those financials and they want them at a certain level for a certain amount of time too. So I'm like, well, if you really want to, this thing's listed, So I go, you know what? I called him. I love this guy actually. He's the first seller I've worked with that's like, just call me. My nickname's, I won't even say it, but he has this really cool like youth pastor nickname. He's a cool dude and he wants to stay in the deal. But I go, are you willing to get creative? Because there's several things we could do to save taxes. There's things we could do to keep you in the deal. You're super reasonable. I can kill it with marketing because that's really where it's suffering right now. Anyway, so yeah, and I love that he was like, well, yeah, why not? Let's talk about stuff. And sometimes I've dealt with sellers that are like, because they're so used to people just throwing money at them. I mean, we've got 1031 buyers coming in from California and New York. I mean, every deal that I found that was finally a good one, which is like, oh my God, we underwrite like 7 a week, I swear. So it was like one this last year that I was like, oh my God, we have to go for it. And we did, and I offered over full price, and these guys came in $1 million high. And I was like, and in cash.
My goodness.
Yeah. Like real cash, not like non-contingent, but real cash. And I was just like, I can't compete with that. They can close in 3 days.
Yeah.
Yeah, so hopefully they'll get more creative as we go.
Yeah.
So when you're talking to actual equity, and when you're raising equity capital, what would you say are, and I mean, I see this too, especially, because I used to be a hard money lender and people would come and talk about certain things about their project. What are the most important things when you're talking to potential investors about a deal that you want them to be involved with? What would you say are the biggest components to getting them to say yes?
component. So, I mean, that's kind of like the know, like, and trust triangle, you know? I mean, it sounds so cheesy, but you kind of have to have one to have the other to have the other. So, you know, a lot of it, like the trust part, I think has to do with who you're partnered with, your track record. You know, for example, in that industry, if you ask people that have done deals with them before, you know, what would they say about that person? Know them. So social media is a part of that too. When you asked that question earlier about, you know, do you use social media? I don't really use it to fundraise because it's not legal the way that we do our offerings. But when you're building up that trust, when you're building up that and that know, social media helps a lot. So the trust also comes with you giving before you take. So giving value. So here's how what I do works, like we're doing now. You know, I think it's really important for people to understand what we're doing. The more educated the investor is, the easier they are to have on our team, the easier it is to make them successful because they understand the process. With that non-accredited, non-sophisticated person, they're the person that's going to be calling you all the time because they don't get how this works. And it makes your life really difficult if you did a deal with a bunch of those. There's no way you could go hunt for more. There's no way you could manage the manager now. There's, you know, so
it's a lot of hand holding.
So and so trust would be, you would put trust number one, which is,
well, no, actually, I'd put them all equal.
Okay, so what's number two?
No, like, and trust, all of them, all at the same time. I mean,
know them, like them, trust them.
Those are the things. Now, when it comes to your track record, and
I'm talking more past you. I mean, I understand that people are investing in you, but they're not really, are they? They're investing in a project.
They're, 50-50, I'd say, project and me. So, because I'm a little bit different. I'm not your typical, like everybody in the syndication world, they just do deals.
So,
you know what I mean?
so what would you say, talking about the project, what are the most important things to getting people to say yes?
Say yes. It depends on the person. If they're accredited, usually they'll roll through a pitch deck and then they'll have like 5 questions. They'll call you and ask them. And if they like your answers, they'll invest. If they don't, they won't. And it's pretty easy. When they're a sophisticated person, I have a Q&A list that I usually either input on the slide deck, and so it's pre-answered. And they may have some more, but it's usually, again, a couple. And it's a very different conversation because it's almost like they're like, talk me into it. And I'm like, no, I won't do that. Like, if this doesn't fit your return profile that you want, your projection, like hold time, they have to know all that. But really, I guess it's for me, it's about no pressure. It's about saying, okay, well, what do you expect? And well, first of all, present what we have. And then if they have questions, I'll be like, what do you expect? And then they'll be like, blah, blah, blah. And if it fits, it fits. If it doesn't, it doesn't. You know, so I actually never try to make people say yes because it's kind of
no. And I think, not having a hard sell, I absolutely hate that. Yeah. I mean, so I would never say yes to that at all if I felt like I was getting a hard sell. But when I'm raising capital, just knowing my numbers.
Yeah, knowing your numbers, knowing that.
And having,
her saying that, I mean, really and truly.
The amount of people who don't know their numbers are crazy. And you just sit there and go, all right, well, how about this, this, and this? And as soon as they ask questions and that person can't answer them, and doesn't know and doesn't even have a ballpark idea, for me, number one, make sure to know your numbers before you're going to go in and pitch somebody.
Well, and also the accredited or sophisticated investor needs to know what they want out of it. But then that's through experience, and like she said, that's why she doesn't take on the newbie.
Well, exactly. Well, you can't take on a newbie with that. But the crazy thing is, I've heard people, and it's like they're trying to almost sell you on something. And I'm like, anybody who's been doing this for a number of years who has that kind of money to invest is going to know that you're basically full of shit.
Yeah.
You mind if I do a screen share? I can share with you, like, it's handwritten and it's crappy, or I could just read it off if you want. But I did attend a couple of other people's capital raising seminars because you always want to get some good ideas. You always want to poke holes or stress test your ideas, And then also, like right now, because things are changing with lockdown and people being a little bit, scarcity minded and things like that. Like, how do I continue to raise capital during a lockdown or whenever there's a pandemic, So there's a couple of things that I think that now that I am conscious of them, I think have made me successful in raising capital because I already possess a couple of these, but it just wasn't a conscious thing. So one thing that you want to do, if you'll put together a pitch deck. So it's a professional deck, and it'll have all the usual stuff like information about the market, the team, your projected returns, the underwriting that you've already done on the deal, all that stuff that you always see. You could literally, I mean, if you want samples of pitch decks, I have like folders of them. So, and the graphics are cool, but it really, for me, during this time especially, getting people's attention, giving them an opportunity, and then not being sorry that you're asking for their money. You know what I mean? Because especially if you have, like, for example, in the beginning of a pitch deck, people are, hey, do you want to know 3 shocking facts, about things that are happening right now? That there's blind funds out there that are raising, $3 billion in 2 weeks. There's, things like that are just shocking people in this time. But it's the facts that we're seeing. People are still doing it. There's a lot of dry powder on the side, giving some kind of numbers, factual information that actually tells you why these crazy things are happening and what amount of them. But then also telling people like these 3 things. So you want to present a profitable project. You want to be clear and have clarity on the profit, exactly what they're going to be getting out of that deal. Then also you want to have a playbook or a business plan. So pretty much if you're not new at this, that's typical. We always have that. But that's a huge thing that you want to be clear. Like with your plan, make it very clear on how you're going to get a greater amount of income or how you're going to make the project profitable. Make that very clear, and then have evidence, of that. And then the third thing, having operational excellence. Those are the 3 things that need to be pretty clear right now on your pitch decks. That I think. Because you got to protect your gold if you're an investor.
No, absolutely you do. So, and I mean, anybody who's got experience, by the way, this isn't probably going to be the first time that they've been pitched.
Yeah, absolutely.
And
I mean, they're probably getting pitched if they're in that
Well, if they've
realm.
if they're in that realm and they really are a passive investor, they have been pitched a zillion times. For everybody out there starting out, how did you learn to make your very first pitch book? And basically a pitch book, everybody out there watching, it's just a business plan, and yes, you do need some great graphics and you need something that looks professional. I mean, imagine, the greatest report you ever did in high school and college, and
the graphics and the numbers and the details and everything like that. And you were so proud. It needs to be at least that status or that.
Yeah, absolutely.
Bar.
Where did you find your first? I mean, there. By the way, everybody, you can Google and find examples of pitch books out there. What did you do, Kaylee?
Without using names, I will tell you how I did it. So somebody who had a client in Dallas that is like one of the big boys here in Dallas, but no one knows who they are. They're not someone that's out there, they have a ton of units and they're all like 30 minutes within each other in Dallas. That was one of this person's biggest clients. And so he was like, I'm going to send you the pitch deck and you need to sign off like that it will not go anywhere. No one will ever see this. It's exactly what I did. So I copied the colors of it. I copied the layout. I used the major pointers, obviously inputting my information, what the returns were, the market, all that stuff. So I used another one that works, obviously, because same thing with like sponsors or mentors or anyone. I always think to myself, are they doing what I want to do in the future right now? Is that my future self I'm listening to? If not, it's like Charlie Brown or whatever.
Yeah. Well, and like we were talking earlier, it's partnering with experience. Finding those people that are experienced, they've already done it, because it's not recreating the wheel here. I mean, you're just trying to, for yourself, create what they've already accomplished. And so learning and partnering with
my face on it.
Yeah, exactly. Exactly.
Well, and I mean, that was for me. I mean, I could see you were scrappy. I could see you were scrappy when you just made up your mind, hey, I'm going to do this. I'm going to start doing this. But it really takes getting involved with an experienced team. So you're not recreating the wheel and you're not constantly just out there, just like hitting the pavement, beating your head against a wall. So you do find a lot of success once you hitch your wagon to some other group, which, by the way, is not really wanting to. These guys have been doing it for years. They need somebody to go, be on the ground running, doing all of this stuff, bringing them deals, bringing them investors. So, yeah.
It's a win-win.
It is a win-win.
Yeah, and I've had several more presented to me after that, but I just wanted to, like I said, compare myself to somebody that was doing really well and use their ideas, because if it's working, it's working, you know what I mean? And then now I've worked with the Family Office Club and I've tweaked mine quite a bit. So we have like an institutional pitch deck now that's meant for, hey, if I'm sitting in front of like big funds or, you know, VCs, we're not quite there yet, but big groups of people that want to see what your process looks like. Can we see a case study? Things like that. And then also, here's one tip I'll give that is something nobody is doing right now. Whenever you have 2 team slides, so you'll have a slide for like the visionary CEO and, you know, a couple bullet points on them. Then you'll have a second slide that's got your whole team. Well, on the founders slide, it's really cool if you put in a short video that tells a little bit about, because a lot of the times these presentations are given to people. You're not just usually emailing it, but sometimes you are. Anyway, clickable so that they can see how the person talks, how they present themselves. Like for me, for example, I'm pretty young, right? But I think that everybody, whether it's an attorney, whether it's like my negotiation gangster buddy who has been in the business for 40 years and I call him and he's like, I'm going to introduce you to my friends that have been doing this. I think that they need to meet you in person because they'd be really shocked at, you know, how professional and personable and how mature you are, you know, and I'm like, I know. So you can kind of get that across to people if you put a little video in your pitch deck.
So this is something that is especially important with the rise of coronavirus.
Yeah, absolutely. Again, it's personalizing it, and now we're engaging. Now you feel like you know me.
Yeah, and I put a little thing in mine, a little bit about our purpose, you know, making putting more women into commercial real estate and going towards more financial inclusion for women.
Nice.
Which is great, which I love. I always love that, you know, here at the Divas. We love women in real estate and promoting them. So the last major thing I always notice when, you know, people come up and talk to me, I want to know what the exit strategy is. And that is super important. You know, what is your plan? You know, and having that precise plan, but then also, how am I getting my money back?
Yep.
Am I ever going to make my money back? Yes, I want profit. But I also want to know you have a plan A, possibly a plan B, and a plan C that gets me my money back. And they've got to be logical.
Like having multiple exit plans is definitely really key right now. Like typically in the past, we could get away with 1 or 2, you know, okay. And usually it would be, we're going to refi. If it's not healthy to refi, we can sell. Well, actually, we've always had 3. You can always refi, sell, or hold, you know. And so that's why we give a large projection on the hold time, say 3 to 5 years. It used to be the case. Now it's probably like more 5 to 7. But our goal is always to do it before that. But anyway, so yeah, I guess we have 3 strategies, but now we have to be even more creative. And especially now with the Stinking Heroes Act coming out, where we're supposedly not going to be able to evict for 12 freaking months. Like in any state, any renter, it doesn't matter if the government is backed a loan, if it's a regular bank loan, nothing. Like everyone can't. So we're like, okay, so we could do like a month-to-month lease.
Let me just comment on this. Please call your congressman and urge them not to vote on that. I mean, I emailed. Talk about. Yeah. I mean, get involved. I mean, I don't care if you're Republican, Democrat. I don't care who you are sitting out there. Not being able to evict is going to for non-payment will absolutely bankrupt so many small, you know, entrepreneurs and real estate investors out there. So I mean, this is, you know, when I first heard this, just don't pay your rent thing, I was like, I saw red. I'm like, how dare they get up there and tell people not to pay their rent?
Yeah.
You know, and we'll see it. You know, even, you know, I'm an owner finance investor. Don't pay your rent. Don't pay your mortgage. Well, what am I supposed to do? Because I've got to pay my investors, regardless.
Yep.
You know.
I've got to pay my bills. You know, whoever's in charge of that, they're having to pay somebody. You know, and then you're taking away their income. It's definitely a ripple effect the moment you start with that.
You know, and I love the federal government going, you know, Congress is going, oh, well, we'll just bail out the banks when it gets there. Okay, well, what about all
the ones that are not? Yeah.
What about all of us who are, you know, are not going to make it that far? You know, what about all of the investors who actually own that property outright? But that's how they put food on the table for their families.
And I believe they all went home for the weekend as well.
I know. I heard they all went home, which is disgusting. Absolutely disgusting. They need to get their act together, and they need to not do that. 12 months to evict.
Insane. insane.
So I'm going to go to Colorado next week, and there is an investor, Maria, I cannot remember her last name, but she was on my SEC attorney's presentation on the HEROES Act, and I like her. She is feisty, and she's like, okay, so we can do 30-day lease. Okay, but that doesn't work in Texas and Florida because we have tenant at suffrage, tenant at holdover. They basically, if you get your freaking mail at an address, it doesn't matter if you have a lease or not, you get that for 30 days. So, and if they pay, like if you accept $1 from that person, they can still stick around, you know? And so we're trying to think of creative ways to do this, like short-term rentals, or so her and I are going to put our heads together when I'm out there hiking, see what we can come up with. Because I think that as a business owner, you have to be creative and you have to pivot. Like everything I've done in this lockdown phase has been, okay, pivot, let's go online. Okay, pivot, let's, yeah.
I've used that term more often.
Well, and we were talking about it at the beginning. We said, we didn't know that it was going to be a pandemic. We didn't know that it would be a global pandemic. But we said, hey, the downturn's coming. What's it going to look like? And I just said, everybody's got to be prepared that their business plan, their business model is going to change, every few weeks. And for me, I've been pivoting and trying, doing different marketing techniques and all of that.
And it's the same thing with syndications. People look at, that's one mind shift thing is like, with the team and whatever. So when you're going from flipping houses or running a business that's in single family to multifamily, I find personally, unless that you are doing, flipping houses on a large scale where you're doing like 10 a month and you have like all, lots of employees and you've scaled it, like that's one thing. But when you're just like these little guys doing 1, 2, 3 months, whatever. Then when you get into apartment businesses, you're walking literally into a large business. All of a sudden you have staff. All of a sudden you need policies and procedures. You need key performance indicators for people. You need to lead. And so when it comes to pivoting, you're affecting so many people's paycheck, their lives, things like that. And so it's important to know that when you're going into this industry that you're now becoming like a large scale business owner, not just like I have one LLC. It's like, it's kind of a big deal. So being a leader, being very level headed, focusing on what you can control, not other people's thoughts, actions, feelings, reactions, and just having a plan, getting your shit together, having regular meetings, communicating. I mean, I've had to do a lot of reading even just on that stuff, is just how to structure this stuff and how to help people instead of take from them and be a good leader,
No, absolutely. So
if somebody wanted to get involved, whether they wanted to become an investor, and become an accredited investor, or if somebody just wanted to do kind of what, you do, what would be your advice, or how would they get a hold of you?
So as far as becoming active, I would definitely start off with learning. I mean, that's something like I mentioned earlier. It took me about a year of going to like 2 conferences a month, reading like 1 to 3 books a month. In addition to that, having people that I've met in different, so there's all these different guru groups or clubs or whatever. And so I went to all of their meetings and I met different individuals that were doing deals actively from each group and asked them, how you do it, what your structure looks like. So, I mean, trying to then compare how does that compare to the market? Because then there's these guys out there that work with like Goldman Sachs and they work, with funds and they work in a whole different playing area than the guys that are in these little groups or whatever. So trying to compare the two and then figure out for me what was going to work. That took a year of research. And then plus you're still learning about how these deals get done differently. Again, learning about the different exit plans. So, I mean, and then it's ever changing. So you have to be able to know that, am I a sponge or am I not? If I'm not a sponge, I should probably go the passive investor route. If I am, have time and I have a ton of ability to read and learn, I would definitely go the active route. But yeah, learning for a while if you're wanting to go active. A good book to start on is Joe Fairless's, I think it's called Best Ever Apartment Syndication book. It's like that thick. And I mean, that's kind of like your Bible, just to be able to segment, okay, here's how to raise capital. Here's how to put the entities together. Here's how to find good deals. I mean, the whole thing is kind of laid out in not specific detail, and then get a hold of somebody who has got, I'd say 7 to 10 years of, say 10 years of experience. I have someone that's got 40. That's my gangster that I call. I'm like, this guy's backing me in a corner. So learn, get that experienced person that you can add some value to their life, whether it's, making them feel better or helping them with tasks or whatever. And then that will just kind of do its own thing. And a lot of it too, you need to also work on your mindset, because to be a leader, when you love and believe in yourself, then you're going to be able to walk into these very tense situations where people are calling you names, you're negotiating, people are treating you like total jerks, and be like, no big deal. This is just business,
Yep.
So when you actually get started right? So just to sum up, so now you have to be trustworthy, is what you said was one of the biggest secrets. Know your numbers, know your pitch book forward and backwards. Do your homework. Obviously, you've got to have a really sound business plan. Make it look professional, something that you can send out. Your little tip is make sure and put a video inside it if you're emailing it out so that they can see how professional you are.
And personalized. Yeah.
And then
make sure your team has absolute operational excellence, like that you've got a property manager, that you've got the team put together, like go through that at a later time, that you know that they've done the reposition, the type of market you're in, that they've done this before. This is not their third rodeo, it's their 18th, you know?
So build the right team.
Right.
Not just build, not just
build a team. Build
right.
the right team.
Build the right team.
And like she said before, which we touched on earlier, is setting your ego aside to ask the questions and go to the people that have the more experience and just be humble, because you may have a desire and a drive and believe in yourself, but put the ego at the door and just be humble because you don't have the experience and the knowledge. Yeah, that the people you're going to do have.
And that's hard.
Yeah, that is hard.
It is. It's especially when you're getting started and you see these social media videos with a lot of these real estate investors, and they come off and they're like arrogant and and by the way, not a lot of those guys are successful.
Yeah.
If you see a lot of those people aren't doing active deals. They're just talking.
No. Or they've got gobs of, they'll get a bunch of ones and wrap a few hundreds around it, and then they're like, look at all the money I have, yeah. That
person, the one I said that has 40 years of experience, that's been the person that kind of made me, and it's not that you just stop, you still have that tendency, as a woman or as me, to not want to ask, to be worried about what other people think when you ask them stuff. Women are very not self-focused, other-focused. But he's like, put down your damn books and call me. I was like, okay. So, but for real, he meant it. And so when I get into a pinch, that's who I call,
Which is good. No, and it's good to have somebody to help you sort through all of that. And I know I had that person for a number of years.
Yeah. Well, and Toby Potter, just saying hello to our guests or the people that are watching.
Toby and his wife. They're awesome.
This is by far one of the best shows I've seen in a long time.
Thanks, Toby.
Thanks, Toby.
Now, if you want to get involved and be active, passive, that's something I think there is a learning curve there. The best book for that I've found is Paul Moore's The Perfect Investment. It gives you a good perspective on stocks, bonds, real estate, multifamily, kind of segmenting everything in pros and cons without being biased. And the book's only like that big, so it's not that bad. And it's on audiobook too. But that's a good start. And then again, networking is key. Knowing who does good business, that kind of stuff is also key. And then knowing your deal criteria before looking at prospective investments. That's super. You want to know what your level of return you want, what your hold time is, all that stuff. And if you want to get qualified and work with us or me on starting that journey, on my website, you can just check it out, www.theapartmentqueen.com, and there's buttons everywhere for get qualified now. It'll tell you if you're sophisticated or accredited through a quick quiz, or if you want to check out just the videos to learn stuff, there's a portal in there. So it's all there, podcast, all that.
Awesome.
Fantastic. That's a lot of information. So get a hold of Kaylee on
The Apartment Queen, theapartmentqueen.com.
Which I've always loved. I get all the emails, so I'm like, there's Kaylee again, getting after it.
I need something though. I think it's coming.
So everybody out there watching, please help us build our YouTube channel. Go subscribe, please. And the other thing that I'm doing, I think most people out there know that I own Capricorn and I'm big into notes. I am starting a group mentoring group called the Note Group.
The Note Group.
And the Note Mastermind.
Did you have to struggle with that?
I did. Well, I'm reading my notes. I'm
reading the notes.
I've got my
thinking.
producer in my head, and I'm still not used to all that. So the Note Mastermind sample, which it is pretty much a mastermind, we're going to be going through all of how to buy notes, where to find them, how to finance them, how to work them out, how to profit from them. I know, and I'm just going to be giving away all of my secrets behind the scenes. And this next coming week on Monday and Wednesdays at 12, One is going to be deal analysis. The other is going to be just a basic lesson. It'll be 2 of those every Monday and Wednesday at noon with question. Everybody can ask questions the entire time. It's free next week.
That's awesome.
And it will be here. It'll be on YouTube. So take a look out for that new presentation coming up. So
that's awesome.
It is. It should be fun.
Actually, Kristen, going back to that question about what do you do with unsophisticated, unaccredited investors? I don't take them into our deals, but I've actually sent them to you.
I actually know that. I got one. And I'm like
I have 10 grand, 5 grand. I go, great, get started, don't not start. But it just doesn't qualify for the security stuff. So, I mean, I've been able to make returns with you every month, and it works. And so those are people that if you want to just get started, that's definitely a place. Because I have a bunch of funds that reach out to me and they're like, we can take those people. But I'm like, I feel just like they're very predatory. Yeah. So send them to you. That's what I do.
Nice.
Love it. Yeah, I love it. No, so it's gonna be a fun, new, challenging thing. And yes, it's going to start for the first 20 people is $500 a month, and that's grandfathered in for as long as they stay members, $500 a month.
Nice.
And after that, then it goes up substantially from there.
Okay.
God bless coronavirus. So
That's great.
Yeah.
Well, awesome, Kaylee. Thanks for joining us today. That was a ton of information.
There's so much more. Oh my God.
Yeah. Oh my God. I mean, just the short.
Like how to attract investors. I mean, there's a whole, like I said, course I took on it. So, but a lot of it is laying that groundwork before you can get started. You know, being very different, getting people's attention, being very professional, having the long term in mind. Many things that just kind of all your actions. Like, do you actually have an office address, or do you work at your car? I had to change that. Like, I mean, all kinds of stuff because people want to know that you're going to stick around and that you do good business.
Awesome. Well, thanks for coming on and joining us today. I'm Jaylee Thompson with Texel Real Estate.
And I'm Kristen Gerst with Capricorn Mortgage Investments.
And Kaylee, you go ahead and sign off too.
I am Kaylee McMahon with the Apartment Queen. Thank you for coming.
Yeah, thank you guys. Tune in next time. Y'all have a great week.
Bye-bye.
Thank you for having me.
Bye, Kaylee.